Great, we've got 11 people. Just a few more minutes and I'll start the live stream. 12. Nice. Great, we've got 15 people. Maybe we'll wait another minute. Okay guys, I'm gonna start. So let's have a look at the Bitcoin chart. So every time I start looking at the chart, you want to start on the monthly time frame first, and you want to plot your get rid of this. You want to plot your monthly opening price. So this month's open price was 35, and the week is also important, so you can plot that down as well. And the previous month low. So these three price are significant, and I'll show you why later. So now let's go to the let's go to the daily chart. So when you have a look at the daily chart, you see this range pattern. So this range pattern is it's considered a consolidation, and if you have a look at the Wyckoff redistribution pattern, you will see something interesting. So initially I thought it was this pattern, but I've noticed it's more like this. So let's remember this pattern, and then we'll look back at the Bitcoin chart. So you have two range top, and then you have this what do you call it, just like a smaller rising wedge pattern. And now let's have a look at Bitcoin. So you have these two range top, and then you have this descending wedge pattern. So there you go. Looks very similar, right? And this is the reason why this is a redistribution pattern instead of a accumulation pattern, because you see a lot of these YouTubers or these traders saying this is a accumulation pattern, but I'll give you another reason why it isn't. Because when you have a look at the Wyckoff cycle, this is the Wyckoff cycle. So we are here. So this is a redistribution pattern. Hopefully you can see my mouse. And yeah, we came from the top. This we had a distribution pattern, which was initially start off as a rising wedge, and then it formed a head and shoulders pattern, and then it dropped, and this is where we're at now. And it's forming a redistribution pattern. So that's the reason why we're not at the bottom, because usually when things bottom, it tends to things tend to be oversold, for especially on the monthly chart. When you have a look at the RSI, and also yeah, this is like a bear cycle is not that quick, so that's another reason why we're still in a bear cycle. So when people are talking about you know, Bitcoin is forming a accumulation pattern, they're just impatient, because Usually a bear market, uh, especially in crypto and gold, it lasts a long time. So you can't trade crypto the same way you trade with stocks, because stocks has a over 100-year history, so it's proven to recover each time stock crashes. That's the reason why stock can make a V recovery, whereas uh, crypto and gold takes during a bear market it takes a lot longer. Like it has to find support. So that's the main argument that I would give to someone who think we have bottom or this is a accumulation pattern. So and similar with uh, Ethereum. Now, now let's have a look at Ethereum. So once again, we start with the monthly chart and we plot the monthly open and the wick and the previous monthly lows. Okay. Now we can go to the lower time frame. So what I think will happen in the next few weeks is Ethereum is looking for a strong support. So when you look at support, you obviously have to look at the history. So when you look back before the rally, you get these two prices that gave Ethereum support on the bounce. When you look at the first one, this one's a bit too weak. So the most logical strong support would be somewhere around here, and that also coincide with the weekly 50 moving average, which is once they intersect would be around 1400. But also you want to have a look at this. See this yellow wedge. So that would provide some sort of support as well. So, like I said, I'm expecting Ethereum to drop somewhere. Yeah, it might bounce from this yellow wedge line. But having a look at the weekly 50-week moving average, it might bounce off that. So that's the middle line. All right. So what I'm expecting is for the next 2 weeks, it will hit the 50-week moving average, and then it might retrace a bit, and then make the final drop to this support line, which is the strongest, and that's where. Currently, well, that's where my forecast bottom is for the end of the month. So the reason why monthly close is very important, because based on Gan's theory, Gan trades based on the lunar cycle. So most full moon usually ends like the 3rd or 4th week of the month. So usually the end of the month. So we can actually hit this price near the full moon date. So the full moon date does not predict every top or bottom. So you see, usually full moon date and the new moon date are considered turning points. So turning points in trading is literally just pivot points. So pivot point could be a top or bottom, or just some sort of point where it can either store for a while, like range for a while, or you can bounce from it. So that's what a turning point means. And I think the next full moon is about the 24th. But of course, this is not true for every full moon or new moon date. And let's have a look at how accurate this monthly close, like why monthly close is important. Okay, so let's have a look at Bitcoin monthly chart for 2018. So you can see after the initial crash, see how each month after the initial crash has a definitive trend. So you see this trend dropping, and it ends literally near the end of the month. It's probably like near the full moon, and then the next month it's a full bullish, but it did continue a bit, and the top of this trend is probably the new moon or near it. It's not always exact, of course. Like in real world, you can't use this rule as, you know, as law, but it's good to think of it. I don't use this strictly, obviously, but if you have a look, most trends after the initial crash, like each monthly trend, there is a definitive trend. So this was bullish, then 2 month bearish, 1 month bullish, and then a range, and then a final drop. So that's not going to be exactly the same, because when you look at it, it's not the same. So we have like 4 months down. This was 3 months. So yeah, nothing always, like generally the cycles is similar in terms of, you know, the bull and bear cycle, but it's not going to be exact. So the reason why I know that this month is also bearish is because we haven't dropped to a significant support level yet, and the next significant support level is obviously, well, for Ethereum is 1300. For the reason I just mentioned earlier, like here, and it's also close to the 50-week moving average. Let me see. Okay. So now what? Okay. Yeah, so that's the reason why I feel that we're gonna drop to 1300. And okay, the next thing I want to talk about is there's something I found that might be interesting to you guys. So let's have a look at okay, so these coins were the top 20 coins from 2018, and this is the drawdown from the all-time highs. So what you, if you haven't already noticed, coins from 2018, well, most of it is like 70% of them also, it's doing worse than even a meme coin like Shiba or Doge. Isn't that like alarming? So this further support my argument that, you know, most altcoins fail in the long run if there is, you know, no mass adoption, or if they don't solve a problem that a top 3 coin has already solved, or if the development team just, you know, literally just quit, or there was no more development no more development. So that you got to be careful of that. That's the reason why I'm not a hodler, because you don't know, you don't like what, like coins that might do well this year might not even be around in 4 years. So a full cycle is usually 4 years, because I think the Bitcoin halving is about 3.5 or something. That's a rough length, but yeah, what I've noticed is the crypto cycle runs usually 4 years. And also what I've noticed that is interesting is if there's any coin that piggybacks on the success of another coin, or is somewhat linked, for example, like Manic is a layer 2 solution for Ethereum, right? So the success of Manic solely depends on the 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 success of Ethereum. So the reason why the drawdown of Manic, it's a lot greater during a bear market compared to Ethereum. So Ethereum's right now the drawdown is 60%, Bitcoin is 54%. So usually anything that performs worse than Ethereum during a bear market is usually not a good sign. But having said that, the reason why these coins don't do well, like Manic, KSM, a lot of DeFi, because they piggyback on the success of another coin. So obviously Cake is a DeFi for the Binance chain, so the success of Cake relies on the success of BNB. Similarly with Uniswap relies on the success of Ethereum. Link is connected to Ethereum as well. It's a solution for smart contract for Ethereum. KSM is linked to Polkadot, but they're both doing really bad because, well, KSM is obviously a experiment. Like it's a I guess a side chain where they experiment with development for Polkadot. So obviously this will not do very well during a bear market, because if this doesn't do well, this won't do well as well. And surprisingly, this KSM is doing better than Polkadot. So that's an interesting observation. And during the bear market, obviously most memes will do worse than Ethereum, because there's nothing backing it besides, or at least for Doge, there's nothing backing it besides Elon's Twitter. So so that's the reason why the drawdown of a lot of memes, it's a lot bigger than Ethereum, but surprisingly it's a lot better than the first generation coins. So a lot of these coins, by the time we bottom, like, they're gonna be down like 99%. I know it sounds crazy, but that's what happened in 2018, and it seems like the trend moving forward as well, because there's not enough money to go around. And I found this guy who has a similar view as me. So this guy's called, I forgot his name, Willy Woo. So he identified there is two types of altcoins, and he classified the two altcoins into either a degenerator or a oscillator. So a degenerator during a bear market just keeps going down, okay? So what a oscillator does is, if an altcoin managed to hold its value during, like after it bottoms, if it managed to hold its value relative to Bitcoin. So if Bitcoin is ranging and your altcoin you're holding is also ranging, it's a good thing. Like, for example, a good example is when Bitcoin was ranging, for most part, Ethereum was ranging too. But have you noticed this week or last few days when Bitcoin was ranging, coins like Manic were dropping? So that's not a good sign. That means Manic is a degenerator. But having said that, I do believe Manic still has potential, but it really depends on Ethereum 2.0, and so it really depends on what Ethereum 2.0 solves that Manic already solved, and there's a lot of other factors too. But I'm just basing it based on what the charts is telling me, because obviously my expertise is not the fundamentals. My expertise is just what the chart is saying. So this guy says there is two types of altcoins, and he's on the right track. Like so I have a similar view as him, but how I determine if a altcoin will do well in the next bull market is slightly different to this guy. So how I determine if a particular altcoin does well during the next bull market is how it performs during the bear market. And the best case scenario is obviously BNB. Now let's have a look at BNB. Okay, USD. Okay, let's have a look at its BNB's drawdown first. Okay, I did not add that. Let me just add BNB quickly so you can check the drawdown. Okay. Okay, so when you look at BNB, its drawdown is similar to Ethereum, and it's a bit worse than Bitcoin, but that's a good thing. If it's somewhere close to the drawdown of Bitcoin and Ethereum, it's gonna be a good project. So when you look at BNB, this is the BNB chart, and let's have a look at 2018. So what I've noticed in 2018, the drawdown of Binance Coin, it's exactly the same as Bitcoin. So let's have a look. Here we go. This was the first. So Binance Coin dropped about 85%, if I remember correctly, and that's good. That's actually good for a altcoin, for a drawdown for altcoin. So that any altcoin that drops relatively near the same as Bitcoin and Ethereum will, shoot to the moon on the next bull market. And what was even more interesting was during the range, this is the range. During the range period, BNB actually 10 times from the bottom, while Bitcoin did I think it was 3.5. I don't know exactly from the top of my head, because let me see, it went from 3,000 to 13. Maybe it was 4.5. Yeah, I don't know exact, but it was less than BNB. So what was interesting was during the range market, BNB actually outperformed Bitcoin in terms of return on investment. So that was a good sign. So yeah, I look at the altcoins performance during a bear market, and if it performs really well, it will most likely shoot to the moon in the next bull market. But another factor I look at is its market cap. So its market cap at the peak and its market cap at the bottom. So I'll give you an example. Ethereum's market cap at the peak was, I don't remember on the top of my head. I got it on my Excel sheet. Just give me 1 sec. Okay, Ethereum's market cap at the top was $438 billion. Okay, so knowing that, we know its potential for the next bull market. So obviously anything that reaches near $1 trillion is going to be tough, right? Because there's only so much money to go around. So now the previous top market cap, you have to check the market cap of that coin when it bottoms out. When at the major bottom, major bottom, you check the market cap, and if it's, let's say, for example's sake, Ethereum drops 90%, so 90% down of $438 billion market cap is about 43 billion, right? So 43 billion, and if Ethereum does 100 times, 43 billion will go to what, like 4 billion? 4 trillion, and that's a lot of money. So that's what I'm trying to say is the next bull market, for example, Ethereum will less likely go 100 times. But having said that, it would still do like 30 to 40. So that's my prediction for the next bull run. So yeah, you have to take into consideration of the limitation of the market cap, because that's the reason why people, all these stupid people saying, oh, SHIB's going to $1 or 10 cents. That's ridiculous, because there's not enough money in the world in circulation to pump Shiba to even close to 10 cents or $1. So like you got to do some simple mathematics, like. Yeah, so I like maths, because I did well maths in high school, and I try to implement it a lot in what I do. Like I'm very like things, every trade decision I do is purely based on either technical or statistical or analytical. Okay, so I try not to. In order to do well in trading, you try to separate your emotions with just the data, like the data from the technical analysis, data from the statistics, from the, from these crunching these data, like the market cap. So if you want to buy a coin that can do 100 times, even though Ethereum is a good coin and I'm gonna invest in Ethereum, Ethereum is not gonna go 100 times, even if Ethereum 2.0 is coming out next year. It's just because it's limited to the amount of money people can pump in. $1 trillion is a lot of money. Like, I'll give you an example. The gold market, the total gold market is worth like $10 trillion. So when you're reaching, like, I think, Bitcoin at its peak was 1.1 trillion. That's a lot of money already, and it was struggling. Like at 1.1 trillion, when you look at the Bitcoin chart, it was struggling to. It was struggling to make higher highs. So I remember I was talking about this in the channel, like it was forming a descending wedge pattern. Okay, so I'll tell you how you identify a descending wedge pattern. So see these new highs here, right? This one and this one and this one. So so this is how you measure it. So the new highs, it's not much higher than the previous high. See that? But each time it dipped, it made a bigger dip. So let me try to find it. So the length of this dip is big, but the rise was very small. You understand? You see the difference? And similarly here, the dip was really big, but the rise from the previous high was very small. So that's a big difference. That's how you can see how you can identify a rising wedge, is if the dip length is big, but the new high, the next high, it's very small. See how this is not the case previously? It made a similar big dip, but it made a big high. But when it reached the top, it didn't do that. So that was like after this first high and it dipped here, you can already tell that it will most likely make another like descending wedge pattern. They call this a descending wedge pattern. So I remember when this happened, I knew it was either a descending wedge pattern or it's going to form a head and shoulders pattern, which it actually did both. So this was descending wedge pattern, and then this is a head and shoulders pattern. Yeah, so that's the reason why I knew it was going to top soon. Okay, so I think I went through. Oh, another another argument that people make, they say that we call it Bitcoin is still in a bull market, bull cycle. Okay, they always quote this chart. Okay, so they say Bitcoin is. Let me put this up. They say we are somewhere here or something, right? I've seen some of these arguments that say, oh, you know, it's just the first dip and we haven't, you know, done all this. Okay, here's my counter argument for that. That's actually a good, okay, that's a good argument, and I will dispel that. Okay, and I usually say, look at, okay, the argument is, oh, look at a particular date. They normally quote this, right? Okay, they say, oh, look, it's similar to September 2017, right? I'm sure you guys heard of this argument, but here's the counter argument, okay? So if you have a look at this drop or dip here, see the price. Price was about, let's say, roughly 5,000, right? And the drop is 3,000, just for, you know, rounding off. The difference between this and the current crash is, see this drop here? This is a dip, because a dip is any drop that is less than 50%. If anyone knows the basics of trading or Fibonacci retracement, anything that is less than 50% retracement is considered a retracement. Anything more, based on Fibonacci and Gan's theory, it is a crash. Anything more than 50% is a crash. So if anyone tells you, oh, look, it's you know, Bitcoin is just dipping and we're gonna go back up, no, it's not, because in 2017, yeah, this was a dip, because this was a this was like a what, 30-something%, like 5,000 to 3,000. I don't know exact, but it's less, obviously less than. Let me calculate it now. So it dropped 2,000, about 4 divided by 5. Hang on a sec. 40%. So this was a 40% drop. There you go. It's less than 50%. And what did we have today? I mean, not today. In May, we had a 65, and it dropped to what, 30,000 or just 29. That was like a 55%. I don't know exact, but you get the point. It's more than 50%. And there was another argument that okay, let's look back at 2013. Where was it? 2000. Okay. Another argument that I heard, and it's fair, you know, like, you know, you should always look at what people are saying, both sides of the coin. So people say, look, in 2013 it crashed, and then what? How many months later? 9 months later, it rallied, and they are correct. So what happened back then? Bitcoin crashed 84%. Like I said, anything more than 50% is a crash, and they are right. Like, if I'll tell you right now, if Bitcoin this month or the next few months crashes 84%, sure, it can rally after that, and this is not a short period. This is not, I think, okay, okay, this is not 9 months. This is 6 months, like something like that. Let me see. How many weeks? Yeah, half a year. 25 weeks. 25 weeks is roughly half a year. 6 months. So yeah, if Bitcoin crashes to 84% and it made some sort of double bottom, this is they call this a high low, then yeah, sure, it can rally after that. But we're not even there yet. We're still at what, 50, I don't know, like 50 to 55 or 60% drop. Oh, actually, I already got that figure. It's 55. Bitcoin has dropped. There you go, 54%. So there you go. Yeah, well, the argument is correct. If it drops, more like about 80% or more, and it makes some sort of double bottom, sure, yeah, sure, the bear market would end, and it might. In this case, it did not. Oh yeah, you can consider this as a double bottom because back then, Bitcoin was a small cap, market cap cryptocurrency, so it didn't take that much to move the market. So if you have had $1 billion, you could definitely move the market. But still, it went through a shorter bear cycle, and it still made a double bottom. This is still considered a double bottom, but they call this a higher low double bottom. Cool. So I think that's all I wanted to cover, and I will go through some questions in the live chat. Let me see. Yeah, if you guys have any question, you can obviously don't ask me any trade related questions. If you're a VIP member, a subscriber of mine, I can answer that in the channel. But you can ask me something general. Oh yeah, I didn't really go through the price because I went through the Ethereum price chart. Yeah, and I did mention it's going to 1300, but I haven't really touched on Bitcoin, right? So Bitcoin's a bit more tricky. Okay, but like I said, let's have a look at the monthly chart. So okay, looking at the monthly chart, 35,000 and 36,000 is going to provide a very strong resistance the next month. Okay, and the bottom of this month will probably be lower than this. Looking at the pattern, it looks like it's going to do a descending wedge pattern. That's correct. Yeah. So it's gonna, let me see, it's gonna drop. The support is going to be somewhere around. Yeah, Bitcoin's a bit harder to analyze because let's have a look here. So there's some potential support here or here. So that's the reason why I have a range, because it's a lot harder. It would definitely drop. It would definitely break 28 because it's going to make a falling wedge pattern. So that's the reason why I gave this range anywhere between 22 to 25, because like I said, these were the previous support. Like Bitcoin bounced from there during the bull market. Okay, so it's gonna maybe drop somewhere around here, and remember these resistance here next month. I do like I said this many times in the channel, that nothing goes straight down, nothing goes straight up. So once it finds a strong support either here or here, which I mentioned here, these are all price actions. This is all based on price action. Okay, so yeah, it could drop as low as 22 or 25. Once it finds some sort of support, is most likely be near the end of this month. We can expect another dead cat bounce next month, and it will most likely not break these two lines. So it might even, there are times where it actually even almost touch it, like, or at least the previous bear market. So it could do something like that, 35, and then it's going to drop more. And let's have a look back at what it did in 2018, and you guys can get an idea of what I mean. So, like I said, we are roughly around here, okay? So, like I said, we will put a line of the the opening price of this month and the week as well. And what's interesting is, like I said, price action always matters. See how it went almost, it tests almost the previous monthly open in the next month, not this month, but there you go. So monthly opening and monthly highs and lows always matter in trading. That's just how it is, Like, I don't make the rules. I'm just a student of the market, and we are, Here's the thing about Bitcoin: you gotta separate your expectation with what the market gives you, because there is only one trend, there is only one reality, and that is the market trend. So even though most people want Bitcoin to go to 100,000, you're not gonna, the market decides what you get, not what you want. So if you want to succeed in trading, separate what you want from what the market gives. And that's a very common mistake that most traders make, because I went through all the common stupid mistakes that every trader has encountered. I've been trading for 15 years, and to me, I see myself as a very slow learner, and I made a lot of mistakes too. But the thing that separates me from other traders is I never give up, and when I make a mistake, I learn from it, and I try my best not to repeat the same mistake. So let's go for it. Let's see if there's another question. What's a good source for studying the various patterns you covered? Okay, I don't have a particular link, but I think in my VIP trading channel, I have some links to some websites that you can learn for free. But the 4 traders I follow that are very obviously influential, like popular in the last decade, is the first one's Wyckoff, obviously. Then Garn's another famous trader. Next one is Fibonacci. And the 4th is Elliott, who made Elliott wave theory. So you don't have to learn exactly everything these guys taught, but you just need to know, the basics, especially with Elliott wave. Elliott wave is very complex. If anyone have learned or touched Elliott wave, you know that there's so many variations for the 5 wave theory. But with me, I just need honestly, you just need to know the rough structure, and then you can apply it. For example, I'll show you the 5 wave that Bitcoin did last time. So usually the first wave crosses the we call it exponential moving average, and then that's the first wave. Second wave, I think third wave, 4th wave, and 5th wave. See that? Once again, this is first wave, cross the exponential moving average, second wave, third, 4th, 5th. See how this one didn't cross the previous wave? That's usually it did probably a bit, but it was a fake out. So yeah, it still satisfied the laws of Elliott wave. But this is the real market, real market conditions. Sometimes the laws are not like the Elliott wave laws. It's not always how do you say it? What's the word? It's not that strict. like in real market condition, it doesn't always follow Elliott wave laws, if that makes any sense. So having said that, so that was the 5 wave, right? We are in, I'll show you where we're at on the 5 wave. So like I said, first drop must be below the exponential moving average. So this was the first wave. Okay, maybe. Okay. I think this was the first wave. This was the second. Third. So fourth, I said it's going to be around here. And the fifth is in the VIP channel. So I'm not going to obviously tell you guys where the bottom is, but I already, those who are in my VIP crypto trading room on Telegram already knows the bottom range, and I'll save that for the VIP channel. Oh, I have a hater on the live chat. It's so funny because people who, a lot of you are probably in my VIP trading room, and you guys already know we buy and sell. We trade both. We trade both swings, like the bull swing and the bear swing. I just like to troll sometimes on groups, when things crash, but. Yeah, you guys know, like we actually bought, I remember we bought this on this dead cat bounce for Ethereum, and then we sold at the range top at about 2,500, near there, 2,450, and then we're gonna close soon, and then we might even buy, but that buy signal will be in the channel. Okay, do you guys have any other questions before I wrap this live stream up? Can you talk a bit about Cardano? Okay. I'm not the right person to ask about like fundamentals for crypto. Like, I'm always honest with you guys. Like, my expertise is obviously the technical side, but also when I look at the price of a crypto, I can tell if it's good or not. So, don't ask me about like how good the project is, because I don't. I only know the basics. Obviously, I only know as much as you know through Google. Will alts also move up with Bitcoin next month? That's a good question. Yeah, it depends on the alts. Of course, there's so many alts out there. It just depends on how. For example, in 2018, Binance Coin did really well because there is real utility to it. Like if the particular alt you are holding or trading has real utility, like Binance Coin, it will continue to do well, and that's another criteria I use to determine what I'm gonna buy at the next bottom. Oh, that's another. Jan asked me a really good question. The only way to determine that is if the altcoin moves in a full cycle. So once a coin moves, like once a coin lasts for, like, has experienced a full cycle of 3 to 4 years, you just have a look at the charts, and if it tops. If it correlates more to Bitcoin, then obviously the price of it is more correlated to Bitcoin than Ethereum. So yeah, that's actually a good question, because what I've noticed is there's two type of altcoins. One altcoin tends to follow more the Bitcoin chart or the Bitcoin top, and the other, most altcoin generally follows Ethereum top, obviously plus or minus a few days. So that's definitely something you want to look at. Like, you want to see which you know which coin your altcoin follows. It's either Bitcoin or Ethereum, because those two are the two biggest. Okay, so if there's no more questions, I will wrap this live stream up. Okay, cool. Okay, thanks guys. I'm surprised there's actually like 24 people who turn up for this live stream. I mean, my channel is very small, and I guess probably most of you are probably from my VIP channel. And yeah, everything's looking good. We got a nice floating profit on our on our Ethereum. Some of our trades already closed in profit on Binance, and one of our trade on FTX closed in profit as well, like 2 times profit. And our Ethereum, if it hits our take profit, we should at least, or close to, depending on your leverage, because I said you can use anywhere between 1.5 to 2 times leverage. You can, some of you will probably double or even 2.5 times. Yeah, everything's looking good. So yeah, thanks for tuning in, guys, and I'll probably do a live stream maybe once a month. It really depends, because there's some months Bitcoin or Ethereum is gonna just range and there's nothing interesting, but I'll try to aim for once a month. Yeah, and we'll take it from there. Thanks guys. See you guys in the next video.